Hi guys, welcome back. Today we're going to be looking at Plug Power and whether this company is a buy. The company hit an all-time high of $75 in January, but since then the stock has dropped more than 70% to $21. The reason for this, it's been a mixture of accounting scrutiny and a quarter one's earnings miss as well. However, over the last 2 days, the stock is up more than 18%. Today we're going to be looking at whether this company is a buy. If you do enjoy, consider subscribing. It is free and it does help me out a ton. If not, thanks for watching anyway. On to the video. So before we begin, of course, just a little bit about the company as a whole. So it's an American company that's used to develop hydrogen fuel systems. These systems are used to replace conventional batteries in equipment and also vehicles as well. So they had a lower than expected quarter one of 2021 earnings. So their net revenues expected by the company to be 67 million compared to the 74 million that was expected before. They also have a quarter 2 2020 earnings expectations as well that is set to be lower. So the company expects to have 102 million compared to Wall Street's expectation of 106.5. Overall, analysts have a strong sentiment over the long-term growth of this stock. There's been 9 buys, 5 holds, and 1 sell. However, in the short term, there have been 6 sell ratings by analysts. They also have targeted gross billing targets that could reach 1.7 billion by 2024, with the stepping stones being 475 million in 2021, 750 million in 2022, and 1.7 billion in 2024 as well. So the first reason to buy Plug Power. So the first reason is to the growth that is in Europe and America. So Aconia and Plug Power are launching a joint venture in Madrid. This is going to be to operate, develop, and maintain hydrogen products. Plug Power will benefit from this by being the primary provider of electrolyzer technology, and on the other hand, Aconia Inc. will provide green electricity. This joint venture entails an initial investment of $2 billion, and this plans to capture more than 20% of the hydrogen market by 2030. On top of this, the European Union has a massive commitment to the hydrogen economy. They're pledging last year to invest $550 billion into hydrogen, and Goldman Sachs, which is a very prominent investment bank, expects hydrogen to be a $1 trillion industry by 2050. Recently, they have also released the European Green Hydrogen Acceleration Center, or EGHAC for short, and this promises to deliver about 100 billion in investments into the hydrogen economy by 2025. On top of this, America also plans to send $2 trillion into clean energy. Out of this, a portion will go into hydrogen fuel cells development as well. There is another growth reason, and that is mining. So Anglo American PLC announced on the 4th of February that it would be trying out 300-ton hydrogen fuel trucks in its South African mines. This will be important because as hydrogen technology becomes more commonplace in the trucking, but more specifically the mining industry as a whole, this will be very good news for Plug and other hydrogen players as well. This has also helped heavy metal producers and miners that mine copper, silver, and platinum as well. But the reason that makes this into a growth story for Plug Power is that silver, copper, and platinum is which these trucks are used to be mining, and then those mines, the metals from those minings will also be put back into making hydrogen fuel cells. So the mining industry of silver, copper, and platinum will be mined using hydrogen fuel trucks. And then with that, they're going to be using the silver, copper, and platinum that's mined to create more hydrogen fuel cells to create more trucks. So this could possibly create a positive feedback loop where hydrogen used to power mining, which leads to be more hydrogen needing to be mined, which creates more hydrogen cells as a whole. However, on top of these two major growth reasons, there are 3 major risks for Plug Power. So the first one is subprime financials. Although their gross billings hit a new high last year and they expect to reach 1.7 billion by 2024, since 2006 their net income has been negative consistently for 15 years now. That is a major concern, especially for a company of this size and trading at a valuation the way it's trading at right now. On top of this, even though the science behind the hydrogen fuel cells are very important and very promising, the cells are actually yet to take off because of their high costs of transportation and manufacturing. On top of this, many other hydrogen stocks, such as the hydrogen-powered truck manufacturer Helion, has also fallen extremely because of its lack of actually turning the science into a profitable venture as well. On top of this, as a whole, Plug Power has been losing investor sentiment in the near term. You can see over the last few months it's fallen more than 70%. After many missed earnings and the lack of promise in the future, as a whole, investors are dropping off this stock, which once again creates lesser investor demand, which reduces the stock price in the near term. So the last thing we're going to be looking at today is the technical analysis for this company. See, this company grew insanely last year, all the way from $8 to $76, and now is currently trading at $23 as of right now. However, just keep in mind the 20-day simple moving average has also dipped under the 200-day simple moving average, and the 50-day simple moving average is very, very close. So although it's not completely a downtrend, the stock is kind of settling into a downtrend. We can see towards the end here as well that the stock actually had the 200-day simple moving average as a roof rather than a floor, and that's a very it's a very big warning sign that the stock will be looking very negative in the near term. So just some final words before this video ends. I believe Plug Power has the biggest growth potential in Europe and the mining sector. However, the biggest risk to this company is the unprofitability and the lack of promise in hydrogen fuel cells as well. As a whole, the stock is settling into a downtrend, so I would not recommend to buy it. But if you do choose to invest, make sure to do your own due diligence, and thanks for watching. Bye.